Hello traders, welcome to another daily analysis. Today is November 22nd. I'm just past 12 a.m. Eastern Standard Time, but I'm actually doing this for Monday, so November 21st. Sorry for the delay for today, but let's get into it, and I can also give you some update of the Asian session since we are actually already almost finished the Asian session for Tuesday. So first thing first, there was a tsunami right now, an earthquake right now in Japan, and we don't have really clear picture of what's going on, but that of course gives some buying power into the Japanese yen, as saying that whenever there is risk events, money will flow into the Japanese yen. And it's very interesting. Some people, when I first started trading, don't quite understand how come when there's an earthquake or tsunami, then actually the money is not flowing out, it's actually flowing in. We just understand that there's a currency personality. For Japanese yen, it's really a safe haven for a lot of investors whenever things happen. And especially for Japan, it's been tasted so many times. They have so many natural disasters that they were always came back stronger than the disasters. So it's just a very strong country, very domestic owned debt country. That means that their debt is mostly owned by their own citizens. So it's just a country that is very unique in its own place, and that's why traders tend to really value a lot about their currencies. So that's the first thing. I think the most important thing happening in Asian station right now. So follow the news if you decide to trade London station, but don't be surprised to see a lot of buying power into Japanese yen. On top of that, of course, you already saw a lot of buying into the US dollar. As I mentioned, that we should see some reverse. We should see some pullback this week. So of course, that will also help the Japanese yen. But let's take a look at what happened today. So Monday was again another very light session. Over the weekend, the only data was a trade balance from Japan. It also was better than expected and the previous number. But I read the news and saying that their export number actually decreased consecutively for many months already. So, and they contribute that to a high currency. So what happened is that even though the government's trying very hard to devalue their currency in order to help their export, but whenever things like US election happen, they're always going to have a large buying power into Japanese yen. And that's what they're trying to really battle about. Like, you have this earthquake, boom, money right into the Japanese yen. So for the government who trying to help the export business, because that's for Japan, they have to export to survive. So the exporting is such a big part of their GDP. So that's why currency is such a fundamental effect for the economy. So that's why the government is trying very hard to devalue the Japanese yen. And time to time, whenever you have this kind of sentiment happened, it's always give them a negative effect. So their export number continue to decrease. And now what that tells us is that they will still continue their fiscal easing. So don't be surprised to see that fundamentally they will try to keep decreasing their Japanese yen. And that will be sort of a long-term perspective. And short-term perspective, whenever you're trading, you just have to watch out for this kind of risk events. If they're big enough, there's a terrorist attack happen in a metropolitan city in Europe, in US, then the Japanese yen will be largely bought. So that's just something to keep in mind. Monday morning today is another live session. There's no tier 1 data in both London and New York. We do have the comment from ECB. So let's jump into the sentimental. Of course, WTI, if you take a look at the market, oil market gapped higher over the weekend and today continue to go higher. What happened is that now it looks like OPEC is really, basically they're trying to really meet an agreement before the actual meeting on November 30. And they try very hard, especially from Saudi Arabia minister, to have this meeting with Iran minister. Now, I understand the biggest struggle in OPEC is really not the oil, it's the membership, right? As I mentioned, the members don't get along with each other. And the two most members that don't get along is Iran and Saudi Arabia. And if you look at history, of course, these two countries historically during because of their religion, because of the culture, historically they'll never get along. So that's why I always have very little faith toward OPEC, because the question is really not the economy. If these two members are really, the only problem is the oil, then of course people can make a deal work. But the question lies down to the fundamental culture, fundamental identity of the countries. So that's why I don't have too much faith. But of course they might have an agreement, and that's gonna be a short-term sentiment for the oil market. And of course that's gonna be good for Canadian dollar. But just to keep in mind that even though if they reach the output cut, this is very easy to be broken. That's the first thing. Second thing I read from the article is that even if they made this output cut, you still have oil producer from other part of the world that is not going to work with OPEC. Russia says that they are going to freeze the output because Russian traditionally are more favorable with the Middle Eastern country. But don't forget, you have a lot of oil producers in America and Canada. So what I mean is that the US producer is simply going to pump up more oil if the OPEC decide to cut, because they're just going to take this opportunity to make more money. That's of course from another perspective. So OPEC does not, back in 1970, 1980, yes, all the oil is only in OPEC, it's only in Middle East. But now since the oil sand technology, they have so much oil in Canada and the US. So OPEC really does not have that much power anymore. So even if they did have an oil curb, again, you have another oil producer from other part of the country just going to keep pumping up the oil. And that's really not going to do too much supply curb for the oil, and of course not going to be too much help fundamentally or long-term perspective. So right now if you're looking at the futures market, really it's 50-50. You have of course futures contract start buying into the WTI, but you also have a lot of short position. So for me at this point, I really rather stay out. But I do know that right now the sentiment is in favor of the oil cut, which is in favor for Canadian dollar. So I do a day trade during sanctions to buy into Canadian dollar, but I'm not going to hold anything too long. And if I see any opportunity today for daily trade for Canadian dollar, I'm going to buy, but just really tighten my stop loss very, very fast, because I don't want to gamble with this thing for a long-term perspective. I don't have a long-term faith toward this OPEC meeting. Other than that, the all equity market continue to go up, continues to be green. So still in the risk on sentiment area. No surprise, there's no economic setback for dollar to stop going up. So right now, occasionally you see some pullback. Just to understand that pullback is purely sentiment. It's nothing really fundamentally negative for US dollar. So dollar sentiment will continue, but as I mentioned, as a trader, just be careful not to buy high and sell low. So always to leave yourself some margin of safety that will give you more probability to win. So risk on sentiment continue, and OPEC right here as mentioned. Australian dollar and New Zealand dollar, it's still fundamentally neutral to bullish, but at this moment, because sentiment really overshadows everything, especially Australian dollar right now is really a contrary pictures, because fundamentally it's a lot of banks actually give a basically a buying signal for Australian dollar for a long-term perspective. It looks like the first time they actually give them a rate hike possibility for the first time in 2018. So everything is looking good fundamentally for Australian dollar, but it's being sold just because the strength into the US dollar. And also, as I mentioned, the commodity speculators curb from China. So right now, it's just, try not to jump into this gun, otherwise you're really catching a falling knife. So basically, you can wait for the sentiment to turn, but if the opportunity is good enough, if you have a very lower end reversal signal into Australian dollar, then of course you can take the opportunity to buy it because you have a better risk reward ratio. Same thing applied to the New Zealand dollar. British pound is neutral, but today we have a bullish sentiment because the Theresa May's comment, basically she's just saying that she is looking out for the business and corporation in Britain. So that means that she starts softening her stance in a hard Brexit. Now she's really looking to maybe do it in a more moderate way to probably work more toward with the Britain economy. Back then, she really just want to exit the Eurozone just like that, like a hard divorce. But right now, she's trying to soft her stance. But of course, politically speaking, it's not in her choice anymore. Right now, the High Court already said that Parliament needs to give approval. So really, right now in British pound, we're still in a neutral position. Occasionally, because of the risk on sentiment, because of the US dollar, you will have a good buying opportunity, which you can actually take that advantage to buy. Now, Euro dollar, Swiss franc, and Japanese yen, the three safe haven currency, is still a negative currency. Euro dollar, especially today, have two ECB official comment on the bond buying, and they were saying that right now, basically they're saying the circumstances they still need a low rate environment. So they really give a lot of hint already about the December 7th meeting, which they'll decide if they want to extend their bond buying. But what happened to ECB is that normally they don't like to surprise the market, right? They don't like to really jeopardize things. So right now, basically the traders are priced in for a continuation of bond buying program already. Of course, that's going to be negative for euro dollar. On top of that, December is Italian referendum, as mentioned, going to be another volatile event of euro dollar. And 2017, two major elections from Germany and France. Now, Germany, over the weekend, Merkel says that she is going to run for the fourth term. So this time, of course, she has a very high probability to continue running to win the election, basically. But that really will depend on what happened to the France election. Now, if Merkel lose the election, that's really going to be a big event for euro dollar. If Angela Merkel is out, then you really pretty much people don't have any faith toward euro in the future. But that's going to happen in 2017, so we'll see. The other one in France election is that the first round, the Nicolas Sarkozy basically is out, and that's actually a bearish signal for France. So what happened is that right now they have this nationalist movement, pretty much like Britain, that they want to be out of euro, like a France exit. Now, this movement has gained a lot of momentum during the past years, and especially after Donald Trump's win, now people really thinking that they might have a probability to win. Now, I understand the impact, the difference between Britain and France in terms of exit euro. When Britain left euro, it's really not much a big impact economically for European zone. It's big impact for Britain. But for European zone, because Britain was never really fall into the euro nation, right? They don't really share the same currency. They are not as a big economy as France. But understand that if France leaves euro zone, then that's really pretty much the end of euro if France leaves. Now, if France leaves, the first thing going to happen is that the Nationalist Party gets elected. Now, if Nationalist Party gets elected, then that's pretty much signal a very high probability for France to leave euro. And that's really another negative reason to short euro dollar. Now, Nicolas Sarkozy, the previous president, got basically voted out for their own party's first round. It's a negative news because he had a lot of same policy with the nationalist movement. So if he was to be running, then people might choose him over the nationalist movement because he's more moderate tone. So he shares the same view, but in a more moderate way. But now he's out. So now it's really, you have the nationalist movement versus the Euro movement. And then now it's really 50-50 chance. It really depends on what's going to happen in France. Now, over the weekend, I read news that the French police say that they actually stopped another terrorist attack. Now, you got to understand, this is all going to affect people's voting. If you have continuation of terrorist attack into France, that's only going to make people want to leave out of the Eurozone. So again, 2017 is going to be a volatile year for euro dollar. But as for now, economically speaking, it's also a very negative stance for euro dollar. So that's why euro is really negative. It's basically the most negative currency right now. Swiss franc doesn't have really much going on. They just continue have negative interest rate. So still a negative currency, fundamentally speaking. And Japanese yen, as mentioned, because of the easing, they are going to keep devaluing their currency. So I look at the COT market, which is the future-based market. I put on here so you can have a reference just to see exactly what are the large speculator or what are the future contracts are doing. If you take a look at that, by the way, that's a negative number, right? So you still have a lot of short position into British pound. As mentioned, euro is the #1 short position at this moment, and you actually have a lot of buying into US dollar and Australian dollar. And as mentioned, they both are fundamentally strong. New Zealand dollar is still positive number, but nothing too significant. And Swiss franc negative, and Canadian dollar is actually negative as well. Now, interesting to say that Japanese yen is actually in the positive positions. And again, saying that Japanese yen, because of the safe haven status, and because the country's economy is actually strong as a country itself. So it's really not that bearish in terms of Swiss franc and euro dollar. I also look at the crude oil. You have a lot of buying power into it. Again, it's because of this November 30th meeting. And gold actually is picking up a bit. And what happened to gold is that I understand gold is something that is a physical commodity. So a lot of people don't trade anything, but they just like to buy gold. And that's really comes down to a lot of, culture speaking. A lot of people in a lot of countries outside US have all been through war, World War I, World War II. So a lot of older generation people really think gold is still the most safe money in the world. So whenever gold price drop to a certain point, you will always have buyer into the market to buy the actual commodity, the actual physical gold. So gold is always going to be in demand. You're never going to see gold drop to zero. That's impossible. So whenever you see gold drop to a certain extent, they will always have a bigger reversal power into gold. Now, what is that going to do to us? Well, if you trade gold, then of course that's a good chance for you to make some money into this reversal power. But if you don't trade gold, then it's just a good knowledge to have, I guess. And personally, I don't trade gold. I do buy gold as a commodity, a physical commodity, but gold and silver. And but it's just a culture thing as well. So just understand, just give you a heads up that for gold market, it's always going to have this physical demand for gold. Look at the currencies index. DAX, of course, with today, DAX has been making a new high for many days. Today we have a first bearish engulfing candle. So of course, that's another signal for a reversal into the US dollar. AXY is Australian dollar, and another bearish large candle is continue to drop. So again, it's really not a good point to maybe get into it unless you see a very good reversal signal into Australian dollar. British pound BXY, as I say, large candle with gap up. So that's for today. Good sentiment. CXY is Canadian dollar, bullish large candle with gap up. EXY is actually euro dollar. Again, we do have a bullish kangaroo tail, and all these really are correlated to a reversal signal with the US dollar. Bullish kangaroo tail in JXY, Japanese yen. Bullish small candle in ZXY, and XAY is Swiss franc, a small doji. So really, I'm looking at all this just to give myself more confirmation. You're looking at a futures contract. You're looking at the indices. This is CFD. You're looking at indices, futures market, and then you're looking at fundamental, sentimental, and finally, I'm gonna look at the actual currency pair, and then just give me a more better edge to see exactly if things are lining up, all together. Okay, so let's get into our 28 pairs. So first thing first, last week, as mentioned, okay, just give me 1 second. I have just give me 1 second.